Hey traders, welcome back to another video. Today we're going to be doing a bit of a performance review here on my MyFxBook.com accounts. These are third-party track records that are posted up on the internet from my trading performance. And they are not perfect, but what we're going to do here in this video is we're going to talk a little bit about them. We're going to go through some of my performance recently, some of my wins, some of my losses, what's been going on. And the reason I'm going to do this is because I think that every trader should be doing this with themselves. And so I'm trying to just make a video as I do it for myself. So here's MyFxBook. If you're not familiar with MyFxBook, it's a great site. I definitely recommend you use it if you haven't already started. It's amazing for tracking your performance. You basically link your profile, your trading account to this website, and then it will track it over time. So you can see this this line in orange or red, whatever you'd like to call it. This is something that I started in October of 2020 and have been trading it since. And so you can kind of see like an overall view. And then this is a more recent portfolio that I've added, which is TTFS1. This is a larger profile that I am tracking in the back end of my MyFxBook. So if I refresh the page, there it is. So let's go ahead and take a look at, let's look at the first one first. And we're going to do a little bit of performance. So we're going to look through my two profiles. And then what we're going to do is we are going to basically look at my stock portfolio as well. So I'm going to show you guys everything today, at least a performance measurement. So here's the thing. This profile has been on for a long time. And there has been ups and there has been downs with this trading performance. But the reason I'm showing this again is I want you guys, when you're looking at your own trading performance, what should you be looking at? How can you re-engineer your trading performance to find holes in your approach and to find strengths in your approach? I think that knowing this about yourself is going to be a huge factor to improvement. If you know where you're strong versus where you're weak, it's going to help. So anyways, overall, you can see that this account is up 68%. It is not quite at an all-time high. We just popped back up, but not quite at an all-time high. In February of this year, we had an all-time high. Now, granted, I also do a lot of investing in stocks and stuff like that, and I can tell you that my forex accounts are doing phenomenal compared to my stock market profile. And a lot of you guys probably feel the same way if you have any stocks, because you know stocks here this year have been really terrible. The NASDAQ at the time of making this is down 22%. So to be making any positive gains, to me, I am more than thrilled about, especially given a very tough market condition. When markets are crashing, it's tough on markets because volatility is very high and it can be very easy to make big mistakes. So I've been trying to stay very regimented. My position sizing has been very small on this account with purpose for that, because again, markets coming down, I have made an adjustment since my last performance review to adjust for smaller positions. And here's the thing, right? You might say, well, Nick, smaller positions mean you're not going to make as much gain. And that is absolutely factual. But the thing is, I'm not here to focus on gains. I'm here to focus on risk first, right? During this period of time, I was taking much larger positions. Of course, my strategy was playing very well during 2020, and then into 2021, we had some pretty good gains. But overall, I started to shrink my position size as we went along, just to kind of minimize the volatility. So that was an adjustment that I made along the way. And now let's go ahead and dive into some of the facts. Okay, so 68% up on this account. The absolute gain is 39%. The reason that this is different is because when you add to a profile, or like add money, I've deposited to this profile, it's changed. It's the return of the investment as a percentage of the total deposits. By definition, new deposits will affect the absolute gain. And vice versa, of course, you've got this fact. The gain is just the time-weighted return. MyFxBook is really good with their gains, gain percentages. You can't really game it very well. Sometimes people will claim like, oh, well, you're just depositing to the account, but the math does not work out. I've spoken to the people at MyFxBook. I've gone through their algorithm and how it works. They are very good with their stuff. They have a calculation. It's like a lot of math and a lot of stuff that goes into performance tracking to keep it very, very realistic. So anyways, monthly, you can see it's averaging around 2.89%. This has come down a lot. At one point, this number was at like 5% during this time because, again, I was taking much more risk. So again, during this performance area, I was taking more risk. And you might say, well, Nick, then you should be taking more risk because that was working. And yes, it was. But then we entered into this period where I saw a really strong decline on the performance of the account for a several month window period during the summer. Basically, I had a really tough couple months, and I decided I was able to stick to the plan, and things, with my plan, they would have ups and downs, but the risk was just a bit outside of my comfort zone. Some of the drawdowns there were a bit too steep. We did end up hitting a 19% drawdown, which was too much for my profile. And again, once things kind of evened back out, I decided, hey, you know what? From here, we are going to pretty much reduce the risk percentage per trade by a significant margin. Okay, so next up, we've got, let's take a look at some stuff down here if we scroll down. So here is some simple metrics you can see so far this month, this year. Again, not a crazy beginning to the year by any means, but considering the fact that you've got the stock market doing terrible, like really, really far in the red, I am perfectly fine to be in the green at all. And you might say, well, Nick, Forex is different than stocks. But yes, but stocks and just generally markets, if they are doing really poorly, it's going to carry over into the FX market. It's going to cause some volatility in other places. And to be surviving that volatility to me is a really, really good sign. And again, goes along with my primary objective. My primary objective is not to have 10,000% growth on this. My primary objective is to protect the capital that I have. Because if I try and go for 10,000% growth, I'm very, very strongly likely to blow that account over time. Okay, so next up, we'll take a look at some average win, average loss stuff. So here's an interesting fact. So this has been 255 trades. So now we're getting up into some good sample size data in terms of trade performance in the live markets. 255 trades behind on this account. Finally, we have profitability, right? So this is important. You can see that I have won 109 of 255 trades, which means my win percentage is 43%. That's not that much, right? But stay with me because it matters less about the win percentage when you talk about the risk reward. So we'll talk about that in a second. That means I lost 146, 57% of the trades that I take result in negative profit. And that is psychologically a little bit tough because that means that when I place a trade, I am statistically, if I were to place it on one trade, more likely to lose money. But if I keep trading, it tends to make money. And here's why. The net pips on this has been 7,136. The average win is about 300 pips. The average loss is about 173 pips. And this varies. I'm a swing trader, so I trade different assets. And honestly, pips are not a super great measurement of performance. The reason for that is different assets have different average true ranges, meaning gold trades more pips per day than euro dollar, and euro dollar trades more pips per day than, Aussie dollar. So when you compare these things, you might have a 30 pip stop loss that represents 1% of your account, and you might have a 100 pip stop loss that represents 1% of the account. I hope that you can see that basically proportionally pips don't work out. And in fact, if you just trust me on this, you shouldn't pay attention to really pips very much at all. It's all about percentage risk, percentage gain. That's all that matters. Because again, pips are going to change depending on which assets you're trading. And in this account, I trade many, many assets. So as a trend follower, I don't really discriminate. I trade a lot of different things. So let's continue on. Longs one. Take a look. I thought this was kind of interesting. I actually have a higher win percentage when I go short than when I go long. Thought that was kind of interesting. Best trade ever. You can see this is definitely a gold trade that I took. I took a really, really strong gold trade that happened in August, and that one just went bam, 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 flew higher, and that was kind of that. And then worst trade, I think this was a US indices trade that I placed on the account or something like that. I can't exactly remember, but you can see it was $4,200 pips. But that doesn't necessarily mean too much because, again, that could have still been, 1 to 2% of the account, whatever it was. Profit factor of 1.3, Sharpe ratio of 0.10, Z-score 58%, just some more metrics there for you. Okay, so let's go back here to the monthly analysis. 2020 is when I started the account. I had a really good start. This was actually the elections. And the elections month, if you have been watching my channel since then, yes, I've been making videos all this time. Wow, that's weird to say. November 2020 was the elections, and I had an incredible trade on the NASDAQ. And I don't say that to pat myself on the back because I've had plenty of winners, plenty of losers in the journey here, but I had like 2 trades back to back. Each one of them, I risked something like 2 to 3%. I told you I was pretty aggressive back then. Risked like 2 to 3%, and they came out to be like 12 to 14% winners. It was crazy. And, you know, that is something that doesn't happen too often, so I wouldn't rely that every month I'm going to make 28%. That's incredibly rare for my account. 2021 was a really great year. So you can see I had a lot of negative months. Someone actually made a comment on my channel recently. They were like, Nick, face it, you know, you lose a lot of months, and that's not good, consistent performance. And, you know, to that, I would say, respectfully, trading is really not month to month. As much as people would like to think it's like day to day, week to week, how am I doing this week compared to last week? Really, trading is year to year, in my opinion, because you're going to have some variance. You know, here's the thing, right? If you have a coin flip, let's say, heads and tails, okay? And let's say heads is 55%. It's a weighted coin, right? You're obviously going to bet on heads every time. But there's still a chance that it's going to be tails. So inevitably, let's say that you bet heads, you make 1 heads, and then it flips and it's tails, you lose. 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 Head, you lose. Head, you win. Head, you win. Head, you win. Right? You get the point. This is just a random flip, and it's very possible that even though this only has a 45%, it still could happen 6, 7 times in a row, whatever that number is. The point is, as a trader, you don't have like 95%. Everybody would like to have that. We'd all like 95% hit rate on forex with a 3-to-1 risk to reward, but that is absolutely not unheard of, right? I've never, that is unheard of. I've never heard of a trader actually showing that in a third-party track record. By the way, a lot of people will claim way better results than myself, and I'm not by any means the best trader in the world, and there are people who have better results than me. But there are very few people who like make those giant claims that can actually back it up with a third-party track record. And people who do have a third-party track record that is more impressive than mine, I am cheering you on, because to me, it's not about me comparing it to other people. It's me comparing it to myself and making improvements. So anyways, 2021 had some negative months. 1, 2, 3, 4, 5, 6 negative months. 6 months were negative. 6 months were positive. You can see that the positive months were much better though. Some of the highlight moments were January, which was a follow through with the election. We had more trades. I believe I was bullish on euro dollar during this time. The thing is, right, a lot of these big moments were from singular trades that went wild. If you're familiar with my trading style, then you know that my trading tends to be trend following with trailing stops. And the nature of trailing stops is that if you see a market go like this and you're trailing stops behind that, the winners can become really, really large. And that's kind of the whole point behind my trading strategy. But what it does is, you know, a lot of times you get into a trade trying to trail stops, it comes back. You kind of get in, comes back, kind of comes in, comes back. And then finally you catch the big winner. So this is what equates to several months out of the year losing. And that might not be for everybody. And again, the reason I point this out is because my performance report for me is for me. It might be different for you. You might be like, I don't really like the idea of having only a 43% win rate. And that's totally cool. That's just personal preference. If you want to try a different style of trading, my style is not the only way to make money. There are many paths to success when it comes to trading. Anyways, good months. We had May, 10% month was really good. We're coming into May right now. Hopefully I can have another 10% May month. That would be amazing. September, we had another really good run here. I believe that this was actually some dollar bullishness that I started taking on. So I started becoming very bullish in the dollar and had a couple really good trades in there, riding euro dollar shorts. Aussie dollar shorts were a big thing during this time, I believe. Might also have been doing the same thing. I believe I caught 2 really big Aussie dollar shorts in 2021, and one of them I think was here. One of them I think was here. I can't remember exactly. But we go into 2022. Here we go. This year has been really good, despite you know, some of the terrible market crashes that we're seeing right now. This year has been pretty good. January was another strong start. January tends to be a good month for me. February was also good. We made 1.6%. March was a losing month. We lost 1.7%. And here in April, we were actually just negative until very recently, where I took a trade that went very well. And yeah, it was on CAD Swiss. So I was bullish on oil, bought CAD Swiss due to the correlation there, and went very well. So yeah, so that's where we're at with this account. I think that that probably covers everything that I wanted to cover on this account, but we have more accounts to look at, and we're going to get to stocks too. Stay tuned. I'll show you guys my stock account where I've been trading recently, and we'll get to that. There's a reason I'm saving it for last. But by the way, if you're enjoying the video, make sure to hit the thumbs up. I do appreciate you guys watching my content. I know that this video is definitely more raw than usual. So this profile is usually privated. This is my larger account, and not one that I'm like being super aggressive with or anything like that. But usually you guys will see, sorry, I'm using an ad blocker. It's for the video, MyFxBook. So, okay, here's the thing, right? TTFS, true trend following, steady. That's what the S stands for. I plan on reducing position size on this account as well, due to the fact that this drawdown actually was even more than I was expecting it to. So this account, little context, my other account is smaller but more aggressive. This account is supposed to be larger with less aggression, yet it's still having a really good start to the year. In fact, during the same period of time, which the stock market is down 22%, or the NASDAQ specifically, this account has been up roughly 37. So this is concerning to me. I'm using a slight deviation from my strategy. Or I shouldn't say deviation, a slight different variation. I trade a specific set of assets. I trade mostly currency pairs, mostly yen pairs, mostly some CHF pairs. But the point is, this seems to be working really well so far. And this is basically a reflection of the same trades that I mostly take inside of our private group. Most of those trades come in here. Now, this has not been a smooth sailing ride. You can see that there has been some ups and downs with this account. And, you know, here's the thing with my trading strategy. Again, we'll look at the performance. Look at this. 40% wins, 60% losses. We'll come back to that in a second. 37% total gain. I have added aggressively to this account, so the absolute gain, of course, is going to be, by definition, new deposits will affect the absolute gain. So this thing has been affected by a lot of added funds to the account, but the actual gain on the funds that have been in it at any given time has been a total of 37%. Now, like I said, this thing has been performing well. So you're saying, Nick, why would you talk about reducing position size? Well, here's the thing. It's working really well right now, but some of these losses are pretty intense. Like the losing streaks have been pretty intense. Let's face it. So let's go through this equity chart here for a second. When I started this account, I went 1, 2, 3, three losses in a row. 1, 2, 3, 3 very small wins in a row, probably break even to slight win trades there. And then 1, 2 losses in a row, big win. Check this out. 1, 2, 3, 4, 5 in a row losses. And again, this is a trading style that is not for everybody. I trade with trailing stops. I trade with, what that means is it brings losing streaks into the equation. Okay. 5 losses in a row. Not uncommon to my trading strategy, but not very popular for a lot of people. I went from 18% gains on the account very quickly to wiping it down to 10%. And here's the thing. The reason I say I'm going to reduce position sizes on this account is because, look, man, that is not something I'm comfortable with on a larger basis. 18% down to 10% gains in a short period of time, absolutely not what I'm looking for. And you might be saying, Nick, the account's up. Why are you so worried? Well, the account is up now. But again, I've been doing this for a very long time. Well, at least to me, it's been a long time. This has been, at this point, 25% of my life has been focused on trading. I've been trading since I was 18. I'm 25 years old. That's not great math. It's close. I mean, it's a chunk of my life, maybe, a fourth, a fifth of my life. I've been doing this for a long time, and I've seen a lot of MyFxBook accounts, and I've traded a lot of accounts. And it's very easy to look at performance and say, it's going up. It's going to keep going at the same rate. But no trading strategy is impossible to take down. Trust me, the markets will find their way into your pocketbook. So for me, this has some red flags. I take losing streaks. Those losing streaks can be terrible. In fact, here's my worst losing streak. And guys, you would not imagine, if you're still in this video, check this out. This is some insight. Obviously, I have a trading community where in that community, I share the trades that I'm taking. You would not imagine the kind of flack that you get in this sort of moment. If anybody is familiar with people like Bill Ackman, Kathy Wood, what's that guy? Murray, the big short guy, right? The guy who shorted the stock market. Anytime you have people who are observing your performance in a trading situation, there is an incredible amount of stress, because when things are going well, everyone has praise for you. When things are going bad, though, you know, of course, I'm not trading anybody else's money, so it's not like it's more just criticisms that when you're already going through a drawdown, it's really tough, right? You have people who are like, you know, Nick lost it, and you know, so and so did this, and they're off of their game. Their trading strategy doesn't work anymore. You already have those thoughts yourself. So during these periods of time, that's stressful as anything. So for me, I know from my personal good that 37% in a couple months is too much gain. And so I need to reduce the position size. That sounds weird, right? But again, I need to do a protective measurement, knowing that these drawdowns are going to happen. And there almost certainly will be a period of time where this losing streak is more than where it currently sits. 1, 2, 3, 4, 5, 6, 7. Let's call it 7. I mean, there's a couple break evens in there, but 7 trades where things were not improving at all, if marginally, that's tough. And the thing is, that's going to happen again. It's going to happen plenty of times more in my trading career. A 7 loss streak is not unheard of. I have had 10 loss streaks, right? 10 trades where I open the trade, it goes negative. I open the trade, it goes negative. And this drawdown from a 35% down to a 26%, 27%, that's like 8%. That was my 8.5% drawdown. To me, that's a bit too much for the account size that I'm working with. You know, if I was working on a very small account, then I wouldn't be so worried. But when you, or not worried, but you know what I mean. If I was working on a smaller account, it's okay to be a bit more aggressive in my personal opinion. But once you start getting into larger amounts of money, I don't need to make 37% to make good money, right? When you have a larger capital basis. And of course, I don't reveal all of that metrics on the internet just because this is the internet at the end of the day. And I believe something should be private. I share a lot, but there are certain things. You know, this is what I'm looking at. Is I'm looking at 37%. I'm saying, wow, that's really good. But I'm being a pessimist on my own trading performance. I need to relax the position size so that when this happens again, I can stomach that, and I can also increase the probability of safety on my trading account, right? Because this could have gone much worse. What if I went into a 14 loss period and I don't want to erase all the gains very quickly? So that's just my personal note. Again, this is genuinely me reviewing my performance. You guys are just here with me. Thanks for being here, by the way. If you're enjoying the video, smash that thumbs up. We'll keep going. We got more stuff to look at. This video is going to be a long one. I hope you're enjoying it. But again, just kind of reviewing my performance here. So profitability, we talked about this already. 23 of the 58 trades were winners, 40% win rate. Pips is not super important. Just remember that when you have pips that you're talking about, different assets have different average true ranges. So pips are not really super meaningful. It's all about percentage risk, percentage gain. Longs won. Look at this. My longs have been super low performance. Shorts have been very high. So again, a similar concept to my last MyFxBook account. January was really good. December I was positive. I thought I was negative for sure. December. Oh, I guess I had two. Oh, okay. It was because the first trade that I took on the account was up, but then I erased a lot of those gains. I see. So yeah, first month was rough. Then we came back 13.8, 5.7, 2.8, 8.3. And again, these numbers are really great, but they're a bit high for my comfort level. I'd like to go ahead and shrink that a bit. 7% is not sustainable. And that's, again, why I think that I'm going to reduce the position size in this account, because 7% is really nice. But long term, I've been doing this for a long time. I've looked at 100,000 bajillion MyFxBooks and tracked a lot of trading performance and worked with a lot of traders. I know what successful traders do on average. I know what average traders or losing traders do. Losing traders think that, oh, 7%, let me bust that up to 10%, 15%, 20% a month. I'm going to make big money. And they blow every penny in the account. Successful traders that I know, and my own trading performance, everybody that I know that is a successful trader, they target much less than 7% a month. And that sounds not exciting, but again, this is when I say realistic. You have to understand that it's good when it's good, but when it's bad, what are you going to do? And if you're going for high percentage, that means you have to take high percentage risk. And then when that goes bad, you're going to blow the account. So that is the key to success there, is reducing that position size dramatically. Anyways, that's going to wrap up MyFxBook. Let's go ahead and take a look at my stock portfolio here for a second. So I've been trading stocks for a long time, longer than I have forex. I've been trading the US indices on here as well. You can see I have a whole bunch of trades that I've been taking. I've been picking up some individual stocks here recently. I've also been trading some what's it called? Like gold ETFs on here. So when I trade gold and when I trade US indices, I put it on a real trading account. This is Webull. This is something available to US clients. I don't know if it's for anybody else. Here's the thing. Stocks can be just as volatile, can be just as crazy as forex. And I mentioned that my trading performance in forex has been better. So check this out. This month has been awful for my stock account. In fact, at one point we were at like 120, 125 on this account. So we are down. But context, I started this account at $50,000. So it is up dramatically overall. We have doubled this account over the period of time that I've had this for the last 2.5 years. It has been an aggressive account for me, but we've been trading this thing. We've been investing in this thing. And here is some trading performance. So, I'm big on showing performance in my YouTube channel and stuff like that. So here's the thing. I'm at a crossroads. The reason I'm showing this to you guys is because genuinely I am reviewing my own performance here. And when I look at this and I look at my performance, there's some red flags in the stock market right now. Things are really ugly. Here's the monthly performance. There were so many months where I just made great green gains. And of course, that stuff is easy to make when the markets are going straight up. We had a month there where we made $19,000 in one single month. Crazy. Now, the nature of stocks when you're holding them is that when they go up, they tend to go up slowly and steadily, right? That's how stock markets work. And when they go down rapidly. So you can see this month has been, of course, ugly because a lot of my longer term stuff is down. But remember that we are still up overall pretty well. And so, yeah, this is account performance. We could look at this, for example, some of the dividend stocks, things like that. But again, the main thing that I wanted to show here with this is that when it comes to trading stocks, right? Trading and investing stocks individually, or trading the gold ETF, or trading SPXL, which is the indice, or the ETF that I'll use. It's a leveraged S&P 500 ETF. That's basically the same as trading something like SPX 500 if you're using a broker. That is forex, right? Of course, in the US, we can't trade those certain things on regulated brokers, so I usually tend to trade them in my stock market profile. But you can see, we had an incredible run there. In a bullish market, of course, my strategies tend to do very well. I am a long-only investor / trader. I don't short the stock market. I don't tend to short gold either. So I'm usually just buying things. And of course, buying things works really well when things are going swimmingly. Buying things goes really poorly when markets are crashing. So all said and done, I am not going to complain about this by any stretch of the imagination. And here's why. The stock market has been devastating people this year. I know a number of people, and I've been so fortunate, comparatively speaking, with the trades that I've taken, with the positions that I hold. I am now moving into more just long-term investing on this account. I have been trading this thing actively for a long time, but I'm just going to switch more to, I've just been switching into, I think that there's a lot of bargains out there in the stock market that I plan to potentially add to. here's my list of stocks that I own, right? I've owned Tesla since $99 a share, Apple, Google, Amazon, Disney. You can go down the list, but I've been switching more all of my investment into basically just longer term stuff, as I do think that there are some buys coming in. So I was trading and using a lot of that capital. As things started to go up and up and up, I did close out of some things and started trading with that cash available. But now I basically put all of that cash into longer term stocks. I bought a lot of stuff this week. So we will see if I get decimated and join the pain party that the stock market is right now. Just for context, we could just go look at tradingview.com and take a look at this, you guys. Look at this. So this is the NASDAQ 100. If we go to the NASDAQ, look at this thing. So if you've been trading stocks, if you started this year, this was the toughest year in a long time. Since 2008, this has been the toughest start to a stock market year. Down 21.5% since the beginning of this year. So if you started trading and investing in stocks, down 21%, that's rough. And that's assuming the big ones. You look at a lot of the other ones out there, like PayPal, decimated, right? So I am taking this as an opportunity. This, like, for example, PayPal stock is down 73%. And that's wild. So for me, I am taking this as an opportunity to start building some more longer term positions. And that is my personal approach. I'm not recommending that you do that, because stocks could be really ugly for the next year. Who knows? And if they are, I plan to continue to build a position and probably deposit more to this account. I do have a lot more available to deploy. And this is one of my 3 stock market profiles, each with about, I started each one with about $50,000 in it, and they have each grown. But this account, again, has come down a lot. Granted, this thing was at 125, so this thing has been taking on some water. But it's a longer term aggressive portfolio, so we'll let it do its thing. All right, guys, that is going to wrap it up, I think, for my performance here. Let me know what you thought about my performance. If you have any things that I don't know, maybe you have some suggestions. Maybe you have some observed things in your own trading performance that you would like to share. Please feel free to share them down below. And thank you very much for watching. Have a great day.